Hey everyone, this is Ryan B with Practical Forex Trading. This is your Dow Jones Industrial Average US 30 weekly analysis. The date is March 15th, 2020. And if you want to stay up to date with all of our Dow Jones, NASDAQ, oil, silver, gold, etc., videos, make sure you click that red subscribe button in the bottom right hand corner of your screen. Okay, so we're looking at the Dow Jones. There's a bunch of notes here. Let's go left to right. So first off, my sentiment is mixed. And what I mean by that is, yep, it's pretty bearish, but at the same time, there's some other factors that in the short term we might see price swing up. So hence my sentiment mixed sentiment. I've got some notes here. So people are wondering, like, how far is it going to fall, etc. So if we look at the candle, this is a weekly candle. We see last week's price action, while it stabbed all the way down to 20,400, the body of the candle did close at 22.8. However, this is still a super bearish candle, so we got some support here though at the 22,000 line. So also, price is too far away from the fast-moving average, so a retrace soon is likely. What happens is whenever price gets too far ahead of the fast-moving average, it has to recoil a little bit, regardless of what direction it's going to go in the future. Even if it continues down, it still has to recoil. That's why it's called a moving average, because it's the average of prices, so it has to average back out. Now, the bearish sentiment continues. I'll be more bearish if we see our next weekly candle close around 21,000 or below. Okay, so if we see another candle that comes and it's really like dark and red below 20,000, then I'm more bearish. For now though, it's mixed because we're kind of right in the middle. So we look at the weekly trading volume in the top 32 as well. You know, the Dow Jones is the top 30 blue chips, and really not a whole lot of selling. There was some selling, but really that market had been going up for so long, it kind of just evened things back out. So let's go ahead and look at the daily. We see now price is running pretty close to the daily moving average. Get this volume out of here. But what you see happen is that price, once it pierces through support there, big, strong, bullish candle with price closing above this line, like we mentioned. So the next week's, the next week is important because we really want to see price hold above 22,000. So need price to hold above. I guess we can't call it price. What did it say? We need the average metric, right? The average, Dow Jones Industrial Average. The average metric to hold above 22,000. So, we had some huge, massive drops, but then you have a lot of buying that comes back, and so now it really matters what's going to happen here, right? So if price continues to hold above this line, it needs not only a hold, but then it needs to gain momentum to go back the other way, because what will happen is otherwise if the moving average catches up and price doesn't bounce back, then we'll have our next big sell-off, which would reinforce the bearish scenario. So let's see, if we do believe in a retrace, either way, the retrace is going to be here, back to this 25,000 line. We see this as old support back in fall of 2019. We see it as recent support. So now if price were to recoil, that's where it would recoil to. Let's go ahead and look at this in the 4-hour and put a Fibonacci. So these 4-hour candles are pretty bullish. That's some pretty good buying there. So regardless, we should see, if we use our Fibonacci retracement tool, recent high, recent low. We see price has actually closed above the 23.6 fib line. 38.2 would be next. The 50 is the 25.16. The golden ratio, here we go, 61.8 is closer to 26,000. So all these things could happen with the recoil, and then we could see more move down, or price solidifies, and that's when we see our next big buying dip, right? So that's, let's go ahead and remove that off of there. This is our 10-year trend line ever since the dip in 2008, right? Right there. So what I mapped out here is the parallel trend line, because if we were to take that ultimate low from the 28 crash, we would go right here. Okay? So here's the good news. Even if this dip down to here, right, let's say it goes below that line, then our next big buying opportunity would be here at the 15,000 mark. Now, of course, this is just an average, so it's more like a leading indicator, but it's like good time to get into a market would be when the average drops to its, relative low in the trend channel. Now, this is really good. Price is still moving above this trend channel, so we could see price solidify. Now, this could take the rest of the year. Okay, this is weekly candles. We see our timeline at the bottom, 2021. If prices hold above this 22,000 line, boom, rest of the year, cool. Then we're just up our next big move up, and everything hangs out. If we see prices crash down to here to 15,000, that would be the next buying opportunity. So we'll have to see how our candles close. The next couple of weeks are super important to see where price goes. Okay, good luck this week. Stay strong. Hope you make lots of profits. Talk soon.